schedule a meeting in China in September to ratify it with potential of bringing it out in October. I will just simply say this to you. If indeed this happens, the fuse has been lit just like that. I think the BIS said, here's our new settlement token for the BRICS. You guys all want to bring your gold home because you're going to hold it within your own borders, which will eviscerate the demand for U.S. dollar stockpiling and eviscerate the demand for U.S. Treasury stockpiling. Instead, they will all accumulate their local currencies and others. And this is why in a video I did with Vince Lancy, he thinks that China and Russia will back their currencies by gold so that they comprise the majority of the 60% backing in the currency portion of the unit tokens. But the currency and the gold is held in an escrow account within their own borders and audited independently. So the BIS probably said to all of these countries, get your gold home, you guys, and keep buying it. The central banks are buying it hand over fist, and all we see is repatriation. So Enbridge will allow all of these countries to maintain their own ecosystem in central bank digital currencies. If you take all the global GDP and give it a percentage of 98%, or the countries that make 98% of the global GDP, every one of them has a central bank digital currency, either operational or in development, near operation. So all of these countries will have their own monetary autonomy, their own central bank digital currencies, like the digital yuan, the digital ruble, the digital real. There won't be a central common BRICS currency, but a central settlement currency. Everyone has their own central bank digital currency that will trade over Enbridge to buy things with all of these other currencies, with all of these other countries, free from the Western intermediary bank or the SWIFT. And if indeed it comes to settling for things like energy, they will use the new token called the unit, which Delma Rousseff said, we have agreed in principle to doing this, 40% gold backing and deliverable upon request. They have scheduled a meeting in China in September to ratify it with potential of bringing it out in October. I will just simply say this to you. If indeed this happens, the fuse has been lit just like that. We've lost the hegemony already as oil sales are being done in other currencies, in Saudi Arabia not signing the re-exclusive deal that they've had in place for 50 years, saying we're going to trade in all currencies, dollars included. But the supremacy, that fuse will be lit if they come out and say, we have agreed on a new settlement currency for oil and it is called, or energy, it is called the unit, gold backed and BRICS plus currency backed. The need for these countries to continue to hold dollars and or treasuries dies that day. And that becomes the moment where things start to rapidly accelerate. So it's as big of a deal as anything I've ever seen. And the lack of talking about it, the lack of any Western media discussion of it is criminal, in my opinion. Now, granted, nothing has been decided. But when you have the former president of Brazil and the head of the BRICS New Development Bank with Sergei Glaziev and Putin, who said we've agreed in principle, I believe it, because everything else that they have said that I've reported on for 4 years, it's all come true. This will come true too. This is why the central banks are buying the hell out of gold, using the suppression of the Western market to run cover for it. And more importantly, this is why just in a simple Google search, 30 central banks have repatriated their gold within the last 2 years. And there's a lot more because they know they can hold it within their own borders, remove counterparty risk, cut out the Western influence, cut out SWIFT, cut out the dollar, the chance of weaponization or confiscation of assets, and have their own ecosystem that they will maintain with the ability to settle oil in this new unit. And I think it's the biggest thing I've seen maybe in my career if it plays out this way. But there's no other reason for the BIS to reclassify gold tier 1 and to tell all of these central banks quietly, buy it and bring it home. Where there's smoke, there's fire. Follow the crumbs. You don't need to be a rocket scientist to see the crumbs they're laying at our feet.
Andy Schectman's exploration of the BRICS, Brazil, Russia, India, China, South Africa, and their evolving role in the global economy sheds light on one of the most significant shifts in financial power dynamics in recent history. The core of Schectman's discussion revolves around the creation of a new settlement currency called the unit, which is proposed to be backed by gold and a basket of local currencies from BRICS nations. This development has the potential to upend the existing global financial order, dominated by the US dollar and the US Treasury market. To understand the gravity of this shift, it's essential to appreciate the current landscape. For decades, the US dollar has been the world's reserve currency, a status that has granted the United States unparalleled economic power. Countries around the world have held vast reserves of US dollars and US treasuries, largely due to the dollar's role in global trade, especially in the oil markets, the petrodollar system. This demand for dollars and treasuries has allowed the US to run massive deficits without suffering the economic consequences that would typically befall other nations in a similar position. However, the creation of the unit, as outlined by Schectman, represents a direct challenge to this system. The BRICS nations, particularly Russia and China, have been accumulating gold at unprecedented rates. The Bank of International Settlements, BIS, reclassified gold as a Tier 1 asset, placing it on par with U.S. treasuries in terms of risk. This reclassification was likely a strategic move, signaling to central banks worldwide that gold should be viewed as a foundational element of national reserves, especially in an environment where the U.S. dollar's dominance is being questioned. Schectman explains that the BRICS countries are not just buying gold, they are repatriating it. This means they are bringing their gold reserves back home, out of the control of Western financial institutions. This move reduces counterparty risk, the risk that these assets could be frozen or confiscated in a geopolitical conflict, and ensures that these nations retain full control over their gold reserves. The significance of this cannot be overstated. These nations are preparing for a financial system where their currencies, backed by gold and free from Western interference, can operate independently of the US dollar. The unit, as described by Schectman, is not a common currency like the euro, but rather a settlement currency that allows BRICS nations to conduct trade amongst themselves using their own central bank digital currencies, CBDCs. Each nation's currency will be backed by a combination of gold and a basket of local BRICS currencies, held in escrow accounts within their borders and audited independently. This setup ensures that while the BRICS nations can trade with each other without relying on the US dollar or the SWIFT system, they still maintain monetary autonomy. What makes this development even more intriguing is the role of the BIS. Often referred to as the central bank of central banks, the BIS's involvement in this project adds a layer of legitimacy and coordination that could accelerate the adoption of the unit. Schectman suggests that the BIS has likely been advising these countries to accumulate and repatriate their gold in preparation for this new system. If this is the case, it indicates a level of premeditated strategy that could reshape global finance. The implications of the unit's success are profound. If the BRICS nations begin settling trade, particularly in oil and other critical commodities, using the unit instead of the US dollar, the demand for dollars and US treasuries could plummet. This would lead to a significant devaluation of the dollar and a spike in interest rates, as the US would struggle to find buyers for its debt. The ripple effects on the global economy would be severe, potentially leading to a financial crisis in the US and other Western nations that are heavily reliant on the current system.
There was a big meeting that happened that coincided with the G7 meeting in Italy just a few weeks ago. At the beginning of the year, we were told that there would be 200 BRICS meetings leading up to the one big one in October, where we find out all the new things that the BRICS have agreed upon, including which countries have joined. This meeting in Novgorod, Russia, was the same week as the G7 meeting, and the Royal Crown Prince of Saudi Arabia was invited to the G7 meeting. And they turned it down, said, I'm busy, guys. But he sent his finance ministers to the meeting in Novgorod. Now, remember what I said about the BIS. I believe they told all these central banks 2.5, 3 years in advance, get your gold home and start buying it. We're going to reclassify it Tier 1. That isn't coincidental, the way that it all worked out. Out of nowhere, they massively buy and bring back their gold after years and years and years of it being held in the West. And then all of a sudden it's revalued Tier 1. Well, let's talk about what happened at this meeting in Novgorod. Two things that are worth talking about. Number one, they came out and said 59 countries have formally applied to BRICS. We don't know which ones they are. But number two was two meetings that were announced by Dilma Rousseff. Dilma was the former president of Brazil. She's the head of the BRICS New Development Bank. Call that very similar to the IMF. And she came out and said that I had 2 meetings on the sidelines with Sergei Glaziev and Putin. The reason that in probably 3,000 YouTube videos over the last 4 years that I have said that the BRICS will have a commodity-backed currency is because he said it. He is the architect of this new system. He is the Eurasian Economic Union chief economic advisor. He's high up in the Russian finance ministry, and he is the architect of this new system. And she said, we've agreed in principle to a new system called the unit that will be traded over Project Enbridge. Now, the unit, she says, will be 40% gold. 40% gold, not a basket of commodities like Glaziev originally said. Probably too hard to value all of those individual commodities. But it will be 40% gold in kilobar form, deliverable upon request, and 60% BRICS plus local currencies. Now let's go back to the BIS and the way that they do things. A simple Google search will show you that within the last 2 years, Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia just a few weeks ago, Hungary, Belgium, Egypt just a few weeks ago, Romania, Nigeria just a few weeks ago, Poland, Ghana, India bought 1.5 times the amount of gold they bought all of last year in the first 4 months of this year, brought it all home, plus 100 metric tons they've held at the Bank of England since 1991, brought it all home. Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa just a few weeks ago, and many more, all brought their gold home. Now, why? Now, the conventional wisdom would be it's the weaponization of the treasury market, or the way that Venezuela didn't get their gold back from the Bank of England, right? Where is the trust in the Western system? It can be taken, right? That's the easy answer, but it's not the right one, in my opinion, because in reading the white paper of the unit, it says that the gold that will be used to make the unit token and the 60% basket of local BRICS currencies will all be put into escrow accounts to create the unit token within the borders of the countries that possess it. In other words, they don't all need to send their gold to Moscow or Beijing to a central unit. They will all be able to hold their own gold and their own basket of currencies of the local BRICS countries in an escrow account that will be independently and frequently audited with massive penalties for deviation from the protocol of the unit infrastructure.
As Schectman continues, he delves into the broader strategy behind the BRICS nations' accumulation of gold. Central banks around the world, particularly in BRICS countries, have been buying gold at a record pace. This is not just about hedging against inflation or diversifying reserves. It's about preparing for a new financial order where gold plays a central role in stabilizing and legitimizing their currencies. The decision to back the unit with 40% gold is a clear signal that these nations are serious about creating a stable, credible alternative to the US dollar. Gold has been a store of value for thousands of years, and its inclusion in this new system would provide the unit with a level of trust and stability that fiat currencies lack, especially in an era of rampant money printing and currency devaluation. Schectman's analysis highlights how the BRICS nations are using the current weakness in the Western gold market, where prices have been suppressed through various mechanisms, to quietly build up their reserves. This strategy is brilliant in its simplicity. Buy low, accumulate steadily, and prepare for the day when gold's true value is recognized on the global stage. The reclassification of gold as a Tier 1 asset by the BIS, combined with the BRICS nations' gold accumulation, suggests that a seismic shift is coming. Once the unit is fully operational and gold-backed, the demand for gold could skyrocket, driving prices to new heights. This would benefit those who have been quietly accumulating gold, while the rest of the world was distracted by short-term gains in the stock market and other assets. For individual investors, Schectman's message is clear. Follow the example of the central banks. Accumulate gold and silver as a hedge against the coming financial storm. The central banks are not buying gold because they expect its price to remain stagnant. They are buying it because they see a future where gold plays a crucial role in global finance. The rise of the unit and the shift towards a gold-backed financial system is not happening in isolation. It is part of a broader trend towards de-dollarization and the emergence of a multipolar world where power is more evenly distributed among different regions. The BRICS nations, along with their allies, are positioning themselves as a counterweight to the US and its Western allies. This has significant geopolitical implications. As these nations gain economic independence from the US dollar, they will also gain political leverage. This could lead to a rebalancing of global power, with the US and its allies losing influence in regions where the BRICS and their new financial system hold sway. The potential for conflict is real. The US and other Western nations are unlikely to cede their dominance without a fight. Economic sanctions, trade wars, and even military conflicts could arise as the old order resists the new. Schectman's analysis implies that the BRICS nations are aware of this and are taking steps to protect themselves, not just economically, but also militarily. One of the most striking points Schectman makes is the lack of coverage in Western media about these developments. The silence is deafening, and Schectman sees it as a deliberate attempt to keep the public unaware of the impending changes. This lack of information leaves many investors and ordinary citizens unprepared for what's to come. Schectman's frustration with the media is palpable, and it serves as a reminder to his audience that they need to seek out alternative sources of information. The mainstream media may not be covering these developments, but that doesn't mean they aren't happening. By following independent analysts and experts like Schectman, who are paying attention to these global trends, individuals can position themselves to protect their wealth and take advantage of the opportunities that arise in times of change. As Schectman wraps up his analysis, the message to his audience is clear. The world is changing, and you need to be prepared. The rise of the unit and the shift towards a gold-backed financial system are just the beginning. The global financial order is being reshaped, and those who fail to recognize the signs will be left behind. For investors, this means taking action now. Accumulate gold and silver, not just as investments, but as a way to protect your wealth in the face of uncertainty. Diversify your assets and consider the geopolitical risks that come with the current financial system. The time to act is before the fuse is lit, not after the explosion. In a world where central banks are quietly preparing for a new financial order, the average investor needs to be proactive. The clues are there, the crumbs are being laid out, and it's up to each individual to follow them. As Schectman says, you don't need to be a rocket scientist to see what's coming. The writing is on the wall, and the question is, will you be ready when the change arrives? Engage with the broader community, stay informed, and make informed decisions about your financial future. In an era of rapid change, those who are prepared will not only survive but thrive.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.